boost the Canadian dollar. And if they have been faring well, how they intend to maintain that momentum. So it's not a dated news. Hence, you're not going to see any data around here. So the monetary policy report, the bank rate statements, just like said, it's not a data news, it's a statement. So hence, what we do is more hawkish than dovish. Hawkish means there is hope, it's doing well. Dovish means no, it's going down. It's not really doing well. Our currency is not flying high, you know. So they are just more hawkish than dovish is good for the currency. Now, overnight rates, these are the amounts whereby uh, things like interest rates at major financial institutions borrow and lend overnight funds between themselves. So this rate changes, right? Hence, actual greater than forecast is also good for currency. So we expect that this one that is a data new, so we're expecting 3.75%. So we expect a figure higher than 3.75% for the Canadian dollar to also be strong. So all of these data are going to be released by 2:45 p.m. today, Wednesday, the 23rd of October, 2024. So it's going to be determined if Canadian dollar is going to be strong or it's going to be weak. So we need to pay attention to this. So in case you are trading any Canadian dollar pair, like USD card, GBP card, whatever, Euro card, hence you need to know that by 2:45 p.m., price will just massively move in one direction, depending on how the news comes out. So you don't want to be caught unawares. European Central Bank President Christine Lagarde is going to be speaking also by 3 p.m. So I think a lot of economies are releasing their data at this time. So soon after, it's a press conference also. So today basically is for the Canadian dollar, the GBP also. Governor Bailey is also going to be speaking from the Bank of England. Also giving a projection or a report. And whenever these individuals speak, by reason of their position, it has a way, excuse me, whenever these people speak by reason of their position, it has a way of affecting the strength of currencies, all right? So we also need to pay attention to them. This is for tomorrow, Thursday. So we're not looking out for this ones for today. So for today, it's just Canadian dollar and the British pound. Major news that we're expecting. We also have Reserve Bank of New Zealand Governor Orr speaking also by 6 p.m. today. And I think we have crude oil inventories also by 3:30 p.m. today. So, but all of these other ones, the brown envelopes and the yellow envelopes, they are not high impact news. This one is medium impact, and the yellow envelopes are the low impact news. But we are more focused on the high impact news, which comes with red. So these are the ones that we are focused on. So for today, anything from afternoon 2:45 p.m. all the way to 7:45 p.m., we're going to be experiencing news for different currency pairs. So that being said, so for this morning, we are still in the clear. Hence, we can trade technically, right? So let us start from our currencies. Start from currencies. If you are conversant with the USD JPY pair, you will notice that this guy is always a winner when it comes to buying this guy. It's always a bullish, you know. Just this morning alone, this guy has covered some massive pips. Massive pips. From where price opened till now, we are looking at almost 131 pips, like just like 131 pips already in the bullish trend. And I don't think it's showing any sign of slowing down at the moment because for now, the US dollar is way stronger than the Japanese yen. The Japanese yen is not having any momentum as of now to counter whatever the dollar is doing against it. Hence, this guy is upward movement. But there's a problem. I don't like to buy when price is already up. I like to buy before price goes up. Okay. And some other persons can still join this rally movement in buying the JPY pair because I don't think it's coming down anytime soon. For the whole of this morning, I think this guy is just going to be going up and up and up. Before we can see price slow down, okay, price should start slowing down when we approach this particular level right here. So you see this movement down here, massive sell-off. This is on the daily time frame. So price should be slowing down any moment now. Let me extend it. So not until price gets to this level where we have a drop base, drop base, drop base, drop, then price started trying to rally to the upside. So where we had significant sell-off previously, price might react to this particular level. Hence, we are going to start looking for retracement from this particular level here, which until price get there for USDJPY, I don't think price will start to come down at the moment. USDJPY is just simple. This guy has just been, giving us uptrend momentum. But before it did so, remember that we have some massive sell-off for a couple of days. Sorry, for a couple of weeks for the USD JPY pair, but the dollar is now gaining significant momentum. Hence, price is rallying back to the upside. So we are still focused on the buy until price gets to this level right here. Let me just, until price gets to this level. Now, it's a whole zone. I marked it from my daily time frame. From my daily time frame, and I'm looking at it from a weekly time frame. So until price gets there, yeah, before we experience a downward movement again, like a retracement. All right. I don't think when price gets here, we are going to have that massive sell-off. Just a little retracement, react to that level, then price most likely continues to the upside. In the long run, USDJPY is a buy. All right. The long run, USDJPY is a buy. Now, how do I know? From previous antecedents of price, after price goes up massively, we tend to have some massive retracements. All right, we tend to have some massive retracement like we did here. We tend to have another massive retracement like we did here. All right, significant retracements. Okay, we had another one here. These are major retracement levels. Then this is like really, really extreme. This is like more than ×2 of what we had previously. So price was originally supposed to stop at this level here. This was where price was supposed to stop going to the upside. This level right here, okay, you can see this level right here, all right? But price did not stop. Let me mark this way. This was supposed to be it, but price did not stop. Hence, it broke that zone and kept going down. So price is just trying to recover. So until it gets to this level again, then one of two things will happen. We can see price starting to go back to the downside, but I don't think price will really go back to the downside massively. Since price wants to rally up, it needs more sellers in the market in order to do that. So there's a lot of liquidity lying just around this zone here. So price might just come all the way to this level, pick more liquidity. So on the 1 hour time frame, these are going to look like. So if price hits that level, comes all the way down here, then continues back to the upside. So in the long run, USDJPY is a buy. It's simple and straightforward. All right. If you are in that trade already, you would have been in profit as we speak. So the same thing for USD CHF. Right now, USD CHF has given us significant strength, but I was thinking that price might have a market structure shift at this moment. We are still very much bullish. Let me start this level again. Let me start this again for USD CHF. Okay, so if you look at it from a higher time frame, you notice that for those who have been following my review, I was very keen on this level right here. I was very keen on this level. See this resistance level right here. I was very keen on it. And this support level right here. So we've had price resting at that level for quite a while. Price rested at that level for a long time. So price was just doing buy and sell inside of that range, buy and sell. But as I was expecting, price is bound to break to either the upside or continue going to the downside. Now, where was price coming from before it started ranging? It was coming from the downside. It was coming from the upside to the downside. Hence, the moment price broke above that range, we're bound to see a market structure shift to the upside. So price breaking above at this point here. So price went in, we tested. Okay, so now what we do is we are actively bullish. We are actively bullish. There are a number of ways I can trade this guy right here. When price is actively bullish, I really be looking out for buy. So what I can do is when price goes up significantly, I can use my Fibonacci retracement to see where price will retrace to before I continue buying. Remember, I said I don't like buying when price is already up. I want to wait for price to come back down for me to buy. Now, it might not come back all the way down again. Like, forget it. Price is not coming back to this level. It's not coming back here. Okay, price is not coming back here. Most likely it's not. Not anytime soon at all. Okay, so, but price will still keep going to the upside. So now there are two ways I would like to trade this guy. The first way is my supply demand strategy, which we can also call the other block, is whenever I have a significant move, for instance, price from this resistance point here, after a significant push to the upside that broke this particular resistance level, I look for where the move started from. It started from this candle here. So I look at the candle before it, especially when the candle before it looks a bit insignificant or smaller compared to this one that broke out the structure. So I mark the high to the low and I extend it into the future. Something like this. Now, what I do is I wait for price to come back to that level. Because a lot of times when you have price breaking above a previous high, so we had this low right here, then went to this high, right? Now, price range here broke this particular high. So it broke the previous high to the upside. What I do is I mark the beginning of that move, and there are times where price will come back to that level. So anywhere here, I'm looking out for a buy. You can see I would have won this trade massively. After mitigating this level, price obviously came back again at another time to mitigate this level. So I had another high at this level again, right? I had another high at this level again. Now, price has recently taken out this high, but before it did, I would have been having significant buys around this level. At least I had buy 1, 2, 3 different times. I would have made some good money out of it. So now price has recently broken out of this particular structure, and it did that today. No. So how do I trade? So remember, this is one way. Remember, I said I mark out the beginning of the move. On the other hand, I can use my Fibonacci retracement also. So I have my fib here. So I mark my fib from swing low. Some persons will take the swing low from here all the way to swing high because price broke that resistance to swing high. Now, basically, I target in between my 50 and my 61.8 retracement level, somewhere around here. In between my 50 and 61.8, that's my golden zone. So when price started retracing, I would have been waiting for price somewhere around this level right here, which coincide with my other block, my supply zone, my demand zone rather. So you can see that I have double confluence, all right, to support that price will most likely pull up from this level here. So that's another way you can do this right here, all right? So that being said, now price has taken out this particular high, giving us a new high. But I can't use my fib retracement because price has not started coming down. It has not started coming down. So until price starts coming down, I am not going to be applying my fib. Okay. So where is price most likely going to come down to? Now you can see that this particular move here was still inside this zone. But this move started the one that broke out of this particular structure. I want it to be bold enough for us to see. Okay, so let me take out my fib so that I won't confuse you here. So this is where I'm currently focused on, this particular move to the upside. So there are two ways I can do it now. So I look out for the candle before a massive momentum move. Now, there's a way I do it, okay? There's a way I do it. I have a way of looking out for these particular candles. I look for candles that are not really massive. One, if at all it's massive, it's rejected. It has a significant wick compared to the body. What I mean is, if you look at the body of this candle, it is less than 50% of the range. That's including the high and the low. But you see this candle here is a massive one, right? It covers more than 80% of the total range, including the high and low. So I need insignificant candles. So I have 1, 2, 3, all of them here. So I mark the whole of this space here and extend it this way. So price can potentially come back here before I continue buying, because our USD CHF is still giving us that upward trend. I don't have a market structure shift yet. Now, if at all this guy does not buy from there, let's say there's not enough liquidity for price to continue, then I have this kind of insignificant candle down here also, where this move started from, all right? Where it started from, all the way here. Yeah. Okay. And if at all price then starts rallying to the downside, starts coming down, then remember I said one of the ways we can also do it, we can apply our fib from swing low, all right, from swing low, let me see, all the way to swing high, and I wait for it in between my 50 and my 61.8 retracement level is where I want to take my buy from, right? So these are just very, very simple but effective strategies that we can use to trade. Is it still possible for us to buy this guy? Let me see. Is it still possible for us to keep buying this guy till it pushes to the upside? Just a moment. I would like to check. I usually use my higher time frame to do that. My higher time frame. So this is where price is at the moment, right? Now, price is just trying to retrace back from that massive sell-off. Where was the initial massive sell-off that we had here on the daily time frame? The initial massive sell-off started from this level here, all right? Started from all the way this level right here. So price most likely, price already inside of the zone where I can be looking out for sell trades. So yes, price will most likely keep pushing to the upside until it gets to that particular level. The same thing with USD JPY. Now, the move started way early. In fact, it started from when price opened. So we didn't catch the move right now. It has already started. So we either wait for it to retrace back, or since there's still possibility for it going to the upside, you can even just join this trade. All right, so let's quickly look at gold also. So gold also has been giving us the same thing, massive momentum to the upside. Every single day, gold, most likely, 3, 4 out of 5 days, gold closes bullish. And any day it doesn't close bullish, the following day to close massively bullish. So my 1 hour time frame, you can see how gold has been going to the upside. Now, there's something you need to know about the structure with which gold is pulling to the upside. Why is it that when gold is going, it's going choppily? It's not really, I'm not having this massive movement like we used to have, let me say around somewhere like this. Okay. For a long time now, gold has been doing all of these choppy movements, right? So now what I notice is this, based on the particular market structure, is that gold will always come down a little bit, do some level of retracement. Sometimes it might be slightly significant. What it's looking for is looking out to come and retest previous lows. Come and retest previous lows. So for instance, especially during the New York session, when price opened for that day, this was the lowest point. So price came, retested it, goes up, retested it, and massively going to the upside. When price opened for this particular day, this was the lowest point. Price just started going to the upside. Now, what I do is I wait for price to retrace down a bit. When price for gold retraces down a bit, mark the low point. Most likely, price will come to retest that point, especially at the New York session. For those who don't know, gold has a lot to do with the US dollar, right? So when I start seeing significant wicks like shadow, like wicks to the downside, right? I want to pay attention to that particular level. So when this price came down, you will notice that there was 1 week here. It's showing me that price is being rejected from the downside, starting to pull up. So I can mark that level, right? The whole of the week. Notice that when it was a New York session, price tapped into that level and continued to the upside, right? Now, also on the following day, you notice also price started going up, came down here. It was rejected at this level. So I usually take two positions, either the low for that day, where price opened for that day before starting to go up, right? So if you pay attention to that point, you notice that this was the lowest point here. Then price came to retest this level. Notice that during the New York session, price came all the way down, right, before starting to go up again. So price does this a lot. Now, for today, this is what I'm going I'm going to be doing for gold. This low level here, all right, this is the lowest point so far for today. And for yesterday, I had this low. So if price can come back to retest this level right here, then we are going to continue buying gold. We're going to continue buying gold. It's not giving me some significant other blocks, or I'm not seeing that significant massive level for gold to have a significant retracement. So if you notice, it's having like more like all-time highs at this moment. Gold is just enjoying itself, right? Enjoying itself, invincible, going up. Sellers cannot stop me. So you want to take advantage of that to keep buying gold. But be careful, because usually you can just see a massive spike all the way to the downside. That is good for you. All right. So that is what I'm expecting for gold today. So gold is still actively moving to the upside. Actively moving to the upside. So I'm expecting price to do this, tap back into either of these zones, either here or here, because there's some liquidity here and there are much more liquidity around this level. So don't be surprised if you see some significant movement down for gold to this level, then we start buying it again. I don't buy after price has gone. I usually wait for price to retrace if I'm sure there's an uptrend before I continue buying. All right. So then what else? I can see Euro CHF, USD CAD, Euro USD, and the likes of them. Okay. USD CAD quickly. I think for today, price just opened and started moving massively to the upside. Remember that we have the news on the Canadian dollar later today, so you want to pay attention to this guy. I don't know if you are currently on a trade on this particular instrument right here. So let's just see what is most likely going to happen. Let's see what is most likely. I like doing indices last. Let's see what's most likely going to happen here. So price has been massively bullish, retracement, continuous bullish. Now price is actively ranging. This is about 4-hour time frame. So price has been ranging. Now we expect a breakout from this particular range. And the range is giving us low. Okay, so this high right here. This particular, there's a low here, and there's another low at this level. Okay, which price did not come back to mitigate. Now, but what I would like to see, I don't like it when price is choppy like this. I don't like it when price is doing something like this. I want price to give me a particular sense of direction, to give me a particular, being a particular trend, either uptrend or downtrend. Now, if you notice, price has massively gone to the upside, right? Taking out this previous high at this level. Okay, so price is just actively doing what we call a retracement. Remember what we did for USD, JPY, USD, CHF, right? Price is just actively doing a retracement. So I can apply my Fibonacci retracement to see where price is most likely going to retrace to. So my Fibonacci retracement. So the move that broke this high actually started from here. right? So I'm going to apply from swing low all the way to swing high. So you can see that price has tapped into my entry point. Price is already in between my 50 and 61.8, and you can see some rejections to the upside here. And also I need price. Okay, price has broken above my trend line. It has broken above my trend line at this level, and price wants to hold. Hence, I would at this time go in for a buy on this particular guy right here. I would go in. Oh, sorry. I'll go in for a buy for USD CAD right here, right now. Price has fulfilled my criteria already. So I think this guy is good to go. So if I'm buying it, I'm aiming for this high again. So I expect price to push up to give me this. Hopefully it does that before 2:45, right? It should be 2:45 p.m. for our fundamental. Let me see. Let me see. Okay. The USD CAD for today, yeah, 2:45 p.m. today. So hopefully price does that before 2:45 p.m. today. Now, so I'm doing that, I'm going to have my stop loss somewhere below. In case price insists on not going up and comes down, just take me out, right? So I'm going to have my stop loss somewhere below. Let me quickly do Euro USD before we go to other instruments. Oh, lest I forget. GBP JPY also did the same thing. I think we caught this particular move yesterday. Caught this particular move yesterday. And this was how we caught the move. So I like attacking price from when, see all these choppy candles, right? Before the move started before the move started rather. So I like having that. Now you could see that price went below but came back. So it was until price came back before we started buying it. Now notice that for this day, we use the previous day. We use the previous day. I like using what happened the previous day to trade what today. What happened yesterday, like yesterday, I would use it to trade today, right? Except today's give me another vibe. So I like looking at the candle, the choppy candle, indecisive candle before the decisive one that gave a big move. So up and down, extend to the future. You'll notice that price came here, tapped into this. So I had two zones, tapped into it before finally moving to the upside. All right, massive profit. Like almost immediately, price was just in profit. And so for today, remember, price opened and just started going up all the way. Just started going up. It's not slowing down. So what I'm going to be doing is I'll be waiting for price at these two different levels here. One. Now, if you notice what I'm doing, it looks simple. There's a formula to this, right? And the formula is this. I have a pattern I call the rally base rally. Price goes up. It shows you a sell-off candle like price wants to come down, right? After price has pulled up massively, let's say two consecutive decisive or explosive candles to the upside, then price gives you that vibe like it wants to come down. All of a sudden, it's rejected, and the next candle continues and continues. Now, that point is significant, right? So what I do is I mark that candle, the whole of the candle from the high to the low. I mark it. Price can potentially retrace back to that level, then continue to the upside, right? If you notice, it's a pattern. You notice here, what I did here also, I did the same thing, this indecisive candle before the move started, right? Just the same thing. This indecisive candle here also, if you notice, this particular indecisive candle before this move started from the high to the low. So when market is trending, price is moving to a particular direction, either up or down, irrespective of the direction. This is one of the patterns I use. And if I'm going to be having a retracement from here, remember, I will also apply my fib from swing low all the way to swing high. Then I'll be waiting for price in between my 50 and my 61.8 retracement level right here, where I'm going to be waiting for price also again. So this is just a simple strategy you can apply to almost anything. Apply to almost anything. Now, if at all you didn't get anything, I'll just encourage you. As we speak, it's being live streamed also on YouTube. You can head over to YouTube at Rally Trade. You can watch this video again and again. Look at the strategy I just showed you, practice it, and start using it to take your trades. As you know, very easy peasy. Huh? So USD JPY, sorry, Euro USD rather. My Euro USD is a bit far. Aha. And Euro USD has been giving us that downward momentum. Okay, so you can see here what I did here. The same thing I've been doing before, I did here on my USD, Euro USD rather. Control Y. So let me show you what I did here. Now, look at what I did here. The moment price broke structure to the downside, I was expecting retracement from this swing high to the swing low. Now, if you look at this level here I drew, it's in between my 50 and my 61.8 retracement level. Now, you can see that price went there. I was expecting price tap in and sell. And guess what? The indecisive candle before this massive sell, I also marked this one. So price stopped at my level here and gave me massive sell, easy money, and you know, everybody is good. All right. So we don't need to think too much. To trade this market is not that hard. You don't just know what to look out for. I can assure you. Well, trading used to be difficult, you know. You make money today, lose tomorrow, make today, lose tomorrow. Sometimes you make and you lose more. It looks frustrating, yeah, but the truth is, if you don't know what you are looking out for, that circle will keep going on. You just remain inside of that loop, right? So just easy things, some and you Felix, I can see you. All right. Yeah. Thank you. Good morning once again. All right. So if you don't know what you are looking for, you most likely are going to be ending up with losing trades, losing trades, losing trades. Meanwhile, as you are losing, some other persons are really, really making the money. Okay. So not everybody is having that losing streak like you. Right. So just look out for the right things. Like I said, you can go over and watch this video again and again and again until you understand this concept. Now, look out, price eventually broke out of this game, giving me another swing, right? Giving me another swing from here all the way here. So if I take out this my fib and I redraw it again, because I keep following trend from swing low, high, all the way to swing low when this retracement started. Now remember our key level. Where's our key level? In between 51 and 50 and 61.8, right? Exactly here. I've observed that a lot of times, when price moves massively in one direction, massively, and when it starts retracing, where it started that massive move to the downside from, I mark from swing low all the way to where it stopped and retracing. I always target my 61, in between my 61 and 50 retracement level. And most times it does that. On the condition, cases where it doesn't do that, right? Then it will go in as far as where the move started from. As far as where the move, this massive move to the downside. So remember, I look out for the indecisive candle before the move, right? So something like you see this candle, right? I can mark it the high to the low and I extend it to the future, which becomes my other block. Hence, if price doesn't stop at this level, if I have a sell and price does not sell and it keeps going to this level here, I wait for it here. If it gets here, most likely it starts going back to the downside. Or if at all price now change direction completely, it's no longer going down, then price breaks this my level. Aha. Meanwhile, my stop loss will always be here. If I have this level and this level, my stop loss will be here because they are not that far apart. On the condition that once price break out of my 100% retracement, it means that price wants to change direction, take me out. Then I start applying my fee from swing low to swing high, down, follow the other direction. So I don't bother too much about which direction price is going. Whichever direction you want to go, please go. By all means. Mine is I just follow you, right? If you try to predict the market every time 100%, you are putting yourself in harm's way. Just allow the market to do what it does, right? But know what you are looking out for. When the market does a particular move, then you should know how to follow suit, okay? Follow suit in that particular move because the market will most likely have a repeated pattern. So on the condition that market repeats that thing, then I am going to make the money out of it. Now, 8 out of 10, market will repeat itself. 7, 8 out of 10, it will repeat itself. So if I keep following that, I might not have all the trades, but the ones I have most likely are going to be short trades. I can maximize profit out of those trades. Now, imagine when price did this again. So we have won this trade again. And let me just put it lastly so that you understand what you're about to do for Euro USD. So now, when price now does this massive move to the downside again, right? Then I apply our fib again because I started seeing price trying to retrace to the upside, right? Let me take out this one. So from swing high all the way to swing low, when I started seeing retracement. Now, remember what I told you, right? You won't win all the trades. Price might not get there. So I was waiting for price in between my 60 and 51.8. Notice that price did not get there. So on this occasion, no trade for me. But price is still moving, right? Still moving, but no trade for me, right? So now I am waiting for price because obviously price took out this low after going retracing. It fell massively again, taking out this previous low. So anytime price starts retracing again, then I'm going to apply my fib level again. And besides applying my fib level, I'll also mark my other block, which is my demand and supply zone, to see where if price doesn't stop at that level, where is the extreme end, where the move started from. If you break out of there, then I know that we have lost that trade. Price has changed direction. So I also change direction with price. Okay. So this is what I usually do with my trading. And it has been helpful. And this is how you can also attack the market. So let's quickly round up with our indices. So US 100. So US 100, US 100 is trapped for now in a range. After giving me series of highs, excuse me, after giving me series of highs, you know, to the upside. Okay, after changing structure to the downside, giving me back series of highs. Now you can clearly see that US 100 is beginning to read, and there is an explanation for this. There's an explanation for this. Now, see what happened. See what happened, right? Notice that after price moved massively to the upside, then who's this? Uh, okay, did you take the trades? Someone posted some profits here. Digital dollar. Okay, you sold USD CHF, right? All right, that's nice. USD CHF. All right, okay. All right, so that's good. Let's see, what did we analyze there? What did we analyze? What did we analyze? Just a moment. Need to go back to that USD CHF. Has the retracement started? Okay. Let's see. Oh, okay. Yeah. At this previous high level here. Okay. All right. So USJPY also. All right. So let's just quickly finish this. You're most welcome. All right. Let's quickly finish this. Then I can entertain some questions, some concerns, and the likes. So what are we expecting for indices at this time? Please, what's happening with your account? How many deposits since Monday? Probably you deposited into either GT or Zenith. We've been having challenge with those two banks, right? We've been having challenge with those two banks. So please just drop me your email address and we'll try to rectify it. Sorry for the delay. Sorry for the delay. Aha, so I was talking about US 100. Now, always watch out for footprint of price, right? When it comes to all of these indices, a lot of times demand and supply also comes to play a lot, right? Mr. Moore, I just answered your question. I said we've been having challenge with GT and Zenith. Majorly our banks, banks we use. So hence that is why the money has not reflected. Right. Okay. Thank you. I got your email now. Okay. So that is why it has not reflected, right? So sorry for that. We are going to resolve it very soon. Now, always watch out for where you see price being dumped massively. So see what's been happening. Now, after buyers have, dominated the market for a long time, then you started having this particular sell-off. Once price started selling, it sold all the way down. Now, notice that it sold to this, my level here. Excuse me. Trying to get this perfectly. Sold all the way back to our other block. So if we do our retracement, it didn't stop at 60 or 51.8, came back all the way down to where the move started from. Notice? So we buy it again. Now, what you should have at the back of your mind is this, right? When price is in an uptrend, I expect that after price pushes to the upside to give me a high, then the next time price retraces and pushes to the upside, at some point, I expect that high to be taken out to give me another high, of which this high was taken out to give me another high, which validates that our uptrend is still active, right? Good. Now, condition where price broke out that high, came all the way down, and this time around, after we bought it from another block again, our demand went up. Notice it did not even get to this our high. It didn't even get there. All these ones were struggling to get there, got there, they're finally taken down. It did not get there. Instead, the pattern at which the retracement happened created a massive sell-off. So what I'm going to be doing is, this time around, see that sellers are now very, very active in the market and they were able to push price down massively, right? This place becomes a key zone. So because if I extend it into the future, right, notice that I'm having some reaction of price at that level. Now, for the fact that price couldn't go up from here, if I extend this one also, okay, all the way to this side, because of this massive week, all the way to the downside. Now, if I extend this guy, you notice that price kept bouncing up, bouncing up, bouncing, not having enough momentum to go here and break this high and continue the uptrend. Now, at some point, even this level was taken out. That is the reason why you see a support level, you always buy at support and you feel that at some point, you buy at support and price breaks support and you have a losing trade and you wonder what's going on. You don't buy from every support, right? You don't sell from every resistance. You need to pay attention to the pattern at which price is moving at every point in time. The same thing that happened at this level similarly happened here again. I have huge sell-off, like massive candles, just 1, 2 candles cover so many pips, right? So what I do again, I do the same thing again. The indecisive candle before the move started, which is this small bearish one. So I'm just giving one of the strategies that you can use. Now, if you mark this, all you have to do is wait for price to retrace back, sell off. You can see reactions, massive sell off, massive sell off. Now, what I'm expecting is that this low created at this level also should be taken out. Price found it hard to take this low. Hence, if it cannot go lower, where will it go? It will go higher. So it took out the high, went to this previous place, mitigated. Now, remember, it was creating lows also at this level, right? So it couldn't break the low to continue. Where did it go? It went higher this time around. So this key level is still actively holding price for me. This key level, right, is still actively holding price for me for US 100 as of now, because price broke out of this level to give me a new high, and it cannot go below that previous low right now. So that's why I said US 100 is in a loop, is trapped in a loop at the moment. So what do I want to do with this information? So Price cannot keep doing up, down, up, down. Sooner or later, it's going to break out of that range. Now, pay keen attention to where price is hitting the most. Where price is hitting the most. Price is not really hitting the high as much because this is the high. Instead, price comes more to the low. Okay. So as of now, US 100, if price comes all the way to my low, I'll be looking out for a buy. And if it goes to the high, I'll be looking out for a buy. But because it's an active instrument, I am looking out for the pattern with which price came down. Now, notice you have that same pattern here, right? So I mark the indecisive candle before that pattern, the high to the low. Notice that that is what is stopping price as of now, all right? Now, buying this guy to the upside, selling it to the downside until price change direction. I don't like price being inside a loop. Like, I don't like price ranging. I want price to actively be trending, right? Because you can sell from here when it goes back up now and it breaks it and goes. And you can buy from here when it comes all the way down and it breaks it and it goes. So I don't predict price too much. I allow price to do whatever it wants to do. The pattern with which price moves will determine what I am now going to do. All right, at the end of the day. So guys, if you will take my advice, sell when it gets here, but have your stop loss above. Buy when it gets down and have your stop loss below. That is all I have for US 100 for today until it breaks out of that particular range. Now, similarly, the same thing we're having for US 500. So we have our resistance level. We also have our support level. The price is failing to take out. So price cannot keep doing this thing for long. It's bound to break out of any level. So the same thing for US 100. If it gets to your high, sell, but have your stop loss. If it gets to your low, buy, but also have your what? Your stop loss. D40, I can see a massive move to the downside, I think. So this is what's going to happen for D40. I saw the pattern with which it came all the way down. You see here, price comes back to this level. We are going to be selling this guy. If price comes back to that level, we are going to be selling. Now, aggressive sellers are in the market. So even if you buy, your buy might not really go far. Notice that when price comes out, if you buy, it's not going far. It sells again, if you buy, it's not going far. All right. So, but for now, we can buy this guy when price comes back to this level, right? I can see some liquidity line here, but please make sure you have your stop loss somewhere below to avoid stories that touch for D40, right? Have your stop loss somewhere below to avoid stories that touch. And lastly, oil. Oil, after we had significant fall, the market for oil, and price gave us hope, started rallying to the upside, and all of a sudden, okay, so see the significant fall we had for oil, massive fall over time. Then price gave us hope at this level, gave us hope here. And now price is looking like it's taking back that hope. All right. So price gave us hope, and it looks like started to take back that particular hope. So this is follow the same pattern, massive sell-off, the candle before it, indecisive. I have it here. So I'm waiting for price to tap into this level for me to sell it off again. Even if it's rallying back to the upside, I would definitely have some reaction here. So selling it, I will definitely make some good profits, even if price will take it out in the long run. Okay. And for today, what is most likely going to happen? One of two things. I'm beginning to see retracement, right? So I can have my, no, let me draw my other block first. So for here, so remember our pattern, rally, base, rally, right? So rally, base, rally, all of this is my base. Hence, I will be buying this guy again if price comes back to this level. If price comes back to this level, and I also have another level here where I'm going to be buying this guy again. So the whole of these candles are indecisive candles, so I can still mark the whole of this zone. So they are not that far from each other. Now, I'm expecting price to come lower, then continue back to the upside. Anything outside of this, I am gambling. So there's a saying, you plan your trade and you trade your plan. Most of us don't have a trading plan. You don't know what you are looking out for. Yes, no, not necessarily. I don't always take my entries from page one. I sometimes, if I see, for instance, UQJPY, I took my entries from a 15 minutes time frame yesterday. Price tapped into that zone and it was showing me sign of rejection. I want indecisive candle until I saw an indecisive candle on the 15 minutes before I jumped straight into that trade. Okay, so not always. There are times where it looks clear on my 1 hour. I usually look at my chart pattern on my 1 hour. I look out for my market structure on my 1 hour, my 4 hours. I look out for massive move on my daily or my weekly time frame. All right. So it's more like a top-down analysis, but my executions 1 hour or 15 minutes, 1 hour or 15 minutes. It's not clear on 1 hour. I execute on a 15 minutes time frame. Right. So I hope this has been useful for us. Please go head over to YouTube, watch this video again and again to get a clear understanding. All right. So your story can change from always losing or making money today and losing it tomorrow to consistently being profitable. Consistently being profitable. It is achievable. Very, very achievable. All right. Okay. If I look at D40 on my 15 minutes time frame, you'll see price is coming back to the downside. So I'm waiting for it again. It's trying to take out my liquidity level here. So I'm going to be doing equal low liquidity. Let it sweep it, then we'll move to the upside. Okay. So thank you very much for your time. Unfortunately, I can't take all questions and I can't analyze all the instruments. You're welcome at Olaleke. AUD USD. USJPY, is it still buying? Like I said, I expect that guy to keep going up, USJPY, until it hits that level I identify. It might not just do a sweep massive movement and get there anyhow it likes, but it will get there in the long run. So let me see. USJPY. Okay, so you see this pattern, right? Rally, base, rally. Now it looked like it wanted to come down. What do you notice? Continue to the upside. Base, 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 like wanted to come down, continue to the upside. Yeah, so you might experience the same thing right here. It will give you like 1 or 2 bearish candles, like it wants to come down, then all of a sudden it continues to the upside. So in the long run, it is still a buy in the long run. All right. You're most welcome, Mr. Felix. Amen. Elolanos ODJ. Thank you so much. Thank you, James Sule. You're most welcome. All right. So I think we are done for today. Looking forward to seeing blues on your account. All right. Thank you and enjoy the rest of your day.